What's up, YouTube? So today we're going to do a market review, and I think my market reviews are going to be where you guys learn the most on how I personally trade. So we're going to go over so basically the left side right here. This is before the session. This is after the session, is the right side. So scrolling into the 4-hour, you could see I was looking at this high as a potential draw for the 4-hour. I'm aware of the stop punch that are occurring post AM session. And on the 4-hour time frame, right? You guys should realistically be zoomed in your chart this much. You don't need to see everything. You just need to see what's going on around you. Dropping down to that 1-hour, you can see that same high is right there. So this is that 4-hour high back here. I'm still looking at it down here. But then we have the speed bump right there. And this high is a draw beneath this one. So we're going to take this high now. Also, there's a small inefficiency back here. And it pairs with that pretty good. So that's where I'd be looking. And here's the thing. When you're on the hourly and you're dropping down your time frames, once you start to get a bias, and a bias is nothing more than an idea of something that could happen. Once you start to frame out, okay, maybe price is bullish. Once you start hitting the 15-minute and below, you want to see if there's like bullish fair value gaps, bullish order blocks, any type of PD rate that would at least draw up into that or up into that. That's sort of what you want to look for. So dropping down to the 15-minute time frame, you can see we have that same buy side liquidity pool, but now this is out of the scope. We're dropping down to the 15, so we don't see it, but we see this. And on the 15-minute time frame, you can see we have a bullish fair value gap here that should deliver price into there. And all this stuff frames out your 1 minute to 5 minute when you come into your chart and you're actually trading. So looking at the aftermath, you can see price wicked outside of it, came back in the range, ran up higher, eventually taking out this high. So dropping down to the 1 minute time frame, this is where you revamp, which is my model. It would make sense. If you're bullish on the day, you want price to go higher, you want to see 930 dip lower. That's what you want to see. So as you can see, we have a high back here, which is that high right there. You can see this yellow fair value gap here. You can see that over here. 930 shoots way lower, taking out these guys. And then eventually coming back in the range and closing above this fair value gap, which would support price going for that high. And as you can see, when price is down here under sell side, you can literally long that if you know you're on side. And then once you start getting that inversion and that order block that's put in, those are the things that support your bias, which is that high actually being the bias. Now, when 930 opens and runs lower, you don't know until you start to get those signatures in price. And I teach that down in my revamp down below. So if you guys want, it's on a 24-hour discount starting when this video drops. So if you guys want to understand how to actually find the draws and the pools and how to use time, it's in the link down below. So looking at the aftermath, you can see price literally comes back up in the range, comes back up into this fair value gap, and then eventually almost reaches up for that high. I still think that's a factor, but that's sort of how you want to view the day. And this is how I journal. I have my post session, then I have my aftermath. So looking at this 1 minute chart, you can see we still have those same levels on our daily bias. So the question is how do you navigate to get up there? You wait for your 930 open, and you want to see if that can take out this high. So if you want price to go bullish for the day, it's better you see 930 start heading lower. And I know a lot of people at this moment think, oh, price is turning against me. It's not. This is a stop hunt, and this is what a stop hunt does. So from the moment here, and then price runs down like that, basically the mindset you want to have is, if this is the draw and price reaches down like that, what are they doing? One, they're stopping out people, and two, they're buying no sell stops, right? So at this moment here, you have to start thinking, where is smart money's orders? It's beneath that sell side liquidity down there. So they run down, they get tagged in an order, like a limit. And that's what 930 does. When it opens and whips one direction, it's doing nothing more than going for a limit. So price opens up, rips down there. It obviously collects their orders. But the question is this fair value gap that's put in from sell side, and this is more the advanced stuff, you can buy those sell stops knowing that this inefficiency is likely to be traded to. Now what happens after that is more, if this happens and that happens, if this happens and that happens. So this long here would have been a 6R long, and that would have been a good trade. But what would frame this setup is understanding you're beneath sell side liquidity. You have an inefficiency here that's likely to be traded to, even if you are bearish. So if price is likely to even go short and keep going to the downside, this fair value gap is still a likely draw from that sell side. As you can see, price trades straight through that fair value gap with no respect of it at all. So that is the confirmation that this buy side liquidity pool is now the next draw. Now, when it gets there, does it want to reach to that high? That's the question you need to ask yourself, because now this fair value gap here is turning into an inversion. So now we put in a big fair value gap, but for me, this was too big to take at the time. I don't want to long off that because the R is not worth it. So as you can see, we get an order block put in, price trades above it, and then starts holding on it. So this was a 4R trade to that high up there. So we had a 6R and a 4R. As you can see, another fair value gap is put in, and this is more of like my risk appetite. So this is a 3R. This is the trade I took, and we covered the fair value gap low. We entered on the high, and we took profit here at the speed bump. So this was a good trade, and this is what I call my revamp. So as you can see, a lot of people took these longs today. You can see Rich, what I want to say about this trade you took here, this long before 930, that wasn't wrong. That long is actually good. That was a good loss. That was good. That's really good. So you can see he dipped down. He took the entry here up to that high. So that's really good. Sector, you took the long here up there. That's really good. Ray, you know your MVP so far. These were good longs. Baby ICT, he took that fair value gap long that we took as well. That's good. So you got in before the fair value gap. You basically took the order block. Yeah, that's good. All these trades are good, and you guys have to understand, like he said, 930 Judas, 950 distribution. Some things happen at certain times of the day that you guys need to be aware of. So these trades are good.